Today we will be talking about how you as an investor can choose some of the most profitable lithium stocks, and I'll be sharing a few tips from my experience towards the end of the video as to exactly what I look for in each lithium stock I invest in. So without further ado, let's get into the video. How's it going, guys? Brine here and welcome back to another investing video. As I mentioned, today we are taking a look at how you as an investor can find and choose the most profitable lithium stocks to invest in, as well as some of the things that I look for as well. And as we all know, lithium is of course very hot at the moment, and as a result, lithium stocks are absolutely skyrocketing, and they have been, quite frankly, for the past few years. And in today's video, we're going to be focusing on lithium specific things. We're not going to be talking about things that you generally look for in stocks. I'd rather tailor today's video to the things that you should look at specifically when choosing lithium stocks that are unique to lithium stocks and mining stocks overall as well. Now, lithium is quite an interesting space given the fact it is actually relatively hard to determine the value of a lithium stock due to the fact that there aren't really that many indicators or spot prices. Instead, what we see is people tend to value lithium stocks based off the individual stocks themselves, with the alternative basically being using things such as the Chinese market, which does have lithium carbonate spot prices in order to determine these factors. People even go to the length of using things such as ETFs to try and gauge the market and understand how lithium is going, and then using that information and comparing other stocks with one another in order to determine a value of a lithium stock, or of course a potential future value as well. One thing to keep in mind when you are looking at the value of lithium though is you have lithium hydroxide and lithium carbonate. Now, lithium hydroxide and lithium carbonate, from a pricing perspective, it is slightly different, but you will tend to see that companies who are selling lithium hydroxide do tend to get slightly better prices than the ones selling lithium carbonate. So while you're watching today's video and I explain different things such as the types of lithium to look for in the companies, keep that in the back of your mind. The first key thing to understand is there are two key types of lithium. You have hard rock lithium and you have brine based lithium. Firstly, we're going to focus on the hard rock side of lithium, and this is your typical process of mining where you dig it up out of the ground. Now, if you're looking for sort of the benchmark grade when it comes to mining results, you want to be looking for spodumene bearing mineralization, and it needs to be sitting at about 1 to 1.5%. That is the benchmark when it comes to hard rock. There are plenty of situations where we see higher ranges, of course, and that is significantly better, but aiming for 1 to 1.5% is really what you want to be looking for. Anything more is of course just a bonus, and I'd suggest that anything below that 1% mark is probably not worth your time as an investor, as it won't produce the same economics as many other stocks out there which do have that 1 to 1.5% lithium. We've seen many companies recently sort of hitting that 1.4% on the higher end, so looking at some of those would be interesting as well. What happens then is the spodumene is dug out of the ground. It goes through a thermal dehydration process, which then produces spodumene concentrate in the range of 6 to 7%. 6 to 7% spodumene concentrate is an important figure because it is the ideal amount to then convert that into lithium concentrate or lithium hydroxide. Now, of course, what we're looking for is that battery grade sort of level, which is that range. And when it does come out, it'll be well over 99% lithium carbonate, for instance, or lithium hydroxide. And the key here to remember is you can produce from spodumene both lithium concentrate and of course lithium hydroxide. There is just a slightly different process involved. Now, when we are looking at the extraction process, what you want to focus on, of course, is like other mining sort of companies and the mineral sort of sector in general, what is, of course, coming out of the ground with that. If we get credits such as tantalum credits, which have been known to hit 40,000 US dollars per ton, you can see that this would be very profitable as a little bit of a side gig. But if you see things such as lepidolite in the lithium, then of course this is not a good thing, as it increases the cost of the extraction, as the process needs to continue a few more times when producing the concentrated material. This of course increases the costs when it comes to actually producing that battery grade material for sale, or if you are just selling the ore direct, so DSO, direct shipping ore, then this is going to be less valuable as well, given the fact that people don't want to have to go through the process of getting rid of all the crap that's basically within the material itself. So make sure you do a bit of reading on what is easy to extract, what you're looking for, and of course potential credits that are also involved when extracting the lithium itself, and just the general mining process that could seriously affect the profit margins of the company's operations. Secondly, we have the brine style of lithium, and these projects typically are less capital intensive just because of the way they operate. They take less time to set up, but then if you want to further produce, I suppose, the lithium hydroxide, there are additional costs involved converting it from the lithium carbonate style material to the lithium hydroxide material. Now, we also see that typically these projects are also lower in grade than their hard rock counterparts, and that means what we're looking for is a significantly larger resource when we are investing in brine based stocks, because of the lower grade of material that's coming out. And rather than being measured in percentages as well, brine-based lithium is measured in milligrams. And that is due to the fact that it is a bit of a different process involved. And of course, the material is, while still lithium, it is still quite different. Brine-based projects are typically found in salt lakes. You drill really far down and basically pump groundwater into it to then extract the lithium out the top. This then goes into ponds, and the more ponds and evaporation processes that the lithium goes through, the higher the quality that comes out at the end. So what you'll be looking for is, of course, the high grade means that you will have to do less of that processing, or alternatively, you want to be looking for very, very large evaporation ponds when trying to produce this material in bulk. The lithium brine is then basically put into a chemical plant, and you're aiming for about 1 to 2% lithium carbonate out of that as well. Now, to eliminate the need for these sort of facilities, there is a new process which is called direct lithium extraction, also known as DLE. And this process is significantly more environmentally friendly. It reduces the need for the massive evaporation ponds, and interestingly enough as well, it is significantly cheaper and produces a higher grade of material when we do go through the DLE extraction process. So looking into companies that are involved in the DLE side of things, or will be producing a DLE plant, if you're looking at those developing lithium stocks, is a potential bonus, as you are going to have reduced costs and higher grades, which obviously contributes positively to your bottom line. So what do I look for when I'm personally investing in lithium stocks? Well, there are 4 key areas that I target. The first, of course, is resource size. The more material and the larger the resource that you have, of course, you can produce more lithium, and as well, the mine life is significantly longer, and that makes the economics of a project a lot more viable. You then combine that with the second thing I look for, which is the resource grade. Now, the resource grade is important. Of course, I was talking about that 1 to 1.5% range with hard rock, for instance. If you had the option between a large resource with a lower grade or a small resource with a much higher grade, it's really going to come down to the like for like comparison when looking at, I suppose, both of them comparatively. You then also need to look at the depth. The resource depth is the third thing that I am focusing on. I suppose, nearer to the surface that the material is, the cheaper it is to be extracting. Now, what we're looking at is the strip ratios in this sort of area. And a strip ratio is basically the ratio between the amount of waste that you are digging out of the ground or sucking out in those evaporation ponds compared to the amount of resource that you're actually looking for. Now, if you find something which is 2 parts waste and 1 part lithium, you are in a very, very good position. And of course, if the mine life is long, then you will be in a really, really profitable position when that company, or if that company, does ever start producing. Then we move on to the fourth factor, and that's really location and infrastructure. A lot of these mines are in very, very remote regions, and as a result, sometimes it is quite hard to get the necessary infrastructure, whether that be power, whether that be water, whether that be roads, in order to produce and then get the material out to actually sell it. So looking at those factors as well, and existing infrastructure in the area can significantly reduce the costs of the actual plant itself. Often what you'll see is in a lot of scenarios, for instance, if it is remote, they need to pay for their own power, their own water, and their own infrastructure in order to get the mine operational. So looking at these 4 things and combining them, putting them on a spreadsheet and comparing stocks against one another is a really, really good way in order to determine what stocks are going to be profitable in the future, of course, and the share price of comparing those which are already in existence. That wraps up today's video on how you as an investor can choose some of the most profitable lithium stocks in 2023 and of course moving into the future as well. I hope you did enjoy it. I'd love to hear your comments and other things that you look for in lithium stocks down in the comments section below. Of course, if you did enjoy today's video, make sure you do leave a thumbs up, and if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.